Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 13th, 2024, and we're diving into the latest earnings report from Good Times Restaurants, the operator of Bad Daddy's Burger Bar and Good Times Burgers and Frozen Custard. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Good Times Restaurants has just released their earnings for the fourth quarter and fiscal year ended September 24th, 2024. It's an interesting report with some notable highlights and strategic insights.
Revenue and profitability overview. Let's start with the top line. Good Times Restaurants reported a total revenue of $142.3 million for the fiscal year, marking a 3% increase compared to the previous year. John, what does this tell us about the company's performance?
The revenue growth is a positive sign, indicating that the company is managing to increase its sales despite a competitive market. The net income for the fiscal year was $1.6 million, which shows a turnaround from previous losses. Additionally, the adjusted EBITDA of $5.4 million highlights improved operational efficiencies.
And I see they've been active with their share repurchase program as well.
Yes, they repurchased 543,530 shares, which is a strategic move to enhance shareholder value. This indicates confidence in their financial stability and future prospects.
Segment performance: Bad Daddy's versus Good Times. John, can you break down the performance of their two main segments, Bad Daddy's Burger Bar and Good Times Burgers and Frozen Custard?
Absolutely. Bad Daddy's Burger Bar saw a $1 million increase in sales for the fourth quarter, reaching $25.6 million, with same-store sales up by 3.2%. This is a strong performance, especially in a challenging dining environment. On the other hand, Good Times Burgers reported a modest increase of $0.5 million in sales, totaling $10 million, but their same-store sales slightly decreased by 0.1%.
What factors contributed to these results?
For Bad Daddy's, their back-to-basics approach and brand execution have been effective, as noted by CEO Ryan Zink. However, Good Times faced challenges due to aggressive discounting by competitors, which impacted their sales.
Strategic initiatives and future outlook. Looking ahead, what strategic initiatives is Good Times Restaurants focusing on?
CEO Ryan Zink emphasized a continuation of the back-to-basics strategy, particularly for Bad Daddy's, which has shown positive results. For Good Times, they are focusing on brand evolution through remodels, updated signage, and technology enhancements. This is aimed at improving operational excellence and customer experience.
And what about their share repurchase program?
They've expanded the program by $2 million, bringing the total authorization to $7 million. This move reflects their confidence in the company's future and is a way to return value to shareholders.
Key takeaways. In summary, Good Times Restaurants has shown resilience with a 3% revenue growth and a net income of $1.6 million for the fiscal year. Their strategic focus on operational excellence and brand evolution seems promising. John, any final thoughts?
Good Times is navigating a competitive landscape with strategic initiatives that could drive future growth. Their financial performance and share repurchase program indicate a solid foundation for continued success.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Good Times Restaurants' performance in the comments below.